Good evening. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Wednesday, the 4th of August, 2021, about at 6:40 p.m. Central Time. So here we are in a market that saw a pretty good correction today. And the events of the morning, well, they can be explained. We had a series of reports, including the ADP jobs numbers, which stunk. They came in at 330,000. The market was looking for 660,000. You had very good numbers on non-manufacturing PMI. They were all solid, and the markets were up. The gold market was sharply higher. We were up very well in the stock indices. Interest rates got to 112. You heard the number, 112 on the 10-year note. Then Fed Vice Chair Clarida spoke, and he was a scheduled speech in front of the Peterson Institute, and the market was definitely focused on it, no question. And if you're watching early in the morning, Bloomberg, who I watch early in the morning, they had geared you up. We don't know what he's going to say. Let's see if the market says anything market moving, and he did. He gave the opinion that he's of the opinion tapering will begin by the end of this year, 2021. He's of the opinion the first interest rate hike will come in 2023. He still thinks inflation is transitory. He thinks the jobs will come back. Well, so far, I understand what he said, and that would all be a bit bearish, and you hit the markets right across the board. Out of nowhere, the bonds, the notes, everything was sharply lower. The stock market gave back its gain. Gold fell $20 off its high, not lower on the day, but gave up the whole gain of the day. So did the silver, and you did a lot of reversals in the currencies. Is he right? That's the big question. I think he's speaking from what he thinks. I don't think he's speaking for the Fed, but he is the Fed vice chair, so he's number two, and you have to accept that. Where I think he's wrong is that I'm not seeing any traction on employment. I'm also not buying yet into the argument that inflation is sticky. I think it'll get sticky if people have jobs. I think it gets sticky if we get wage inflation. And I'm seeing that some people, Spirit Airlines today, they're offering double pay if they can get their flight attendants to add a shift. I mean, you're starting to see that, but that's double pay for that shift. That's not a pay increase. Got what I'm saying? So that can happen, and we see that going on. Spirit canceled, I think in the past 2 days, 1,000 flights. They don't have enough people, and people are getting stranded everywhere. So I put that all together, and I am scratching my head. Do I think that the Friday jobs data is going to be the 800,000 plus the market thinks? Well, I saw ADP, it didn't make it, so let's see. That's all I can tell you. Now let's do the charts. All I do is tell you what happened during the day. All right. On the S&P 500 index, you can see how the market's up. And by the way, these are all, I left this on by accident, but these are all the different tools in this charting software that I could use. And you're only looking at some of them. I could add even more. It's got a whole array of things to use. I put them on as small icons so that I could use them when I'm setting things up. Have you broken out one way or the other on this chart? No. If we come to the weekly area chart of closes for the week, with the whole thing, you're up 7 points for the week. That's not a reversal. You're still up to an all-time high if the market ended right here. You've got your sideways action. You have a market that's got a downtrend in the sense of lower highs, lower lows. I respect that. But the market's over the 18-day average, which means the bias is up. That means the market doesn't have to go anywhere to the downside. Can you get a new buy signal out of that? No. The resistance in the market is 44.50, 2.5, let's call it. And the support's 43.70, 50, let's name that. And momentum is still embedded. This is what I care about. Right there. As long as that stays embedded, the rest of this to me is noise. So get the red line to close under 79. I think the market's going to get more of a correction, maybe one that even carries a 42.88 potentially. Keep it where it's at. To me, this is noise, and after the jobs data, you may well move with that because the momentum is up and you're still up for the week, maybe to new highs. In the in the NASDAQ, Notice the market. It's overbought. You have both numbers tonight over 80, but you can't count tonight. We don't know where tomorrow's going to finish. You had both over 80 on the close of business Wednesday, both over 80 on the close of business Tuesday, not Monday. If the market tomorrow closes with this number like it is, you're going to embed. And that's another bullish signal with the trend up, saying that potentially you've got an upside objective, at least the way I teach charting, of 15,232. If it doesn't embed, you're just an overbought market that might have to correct back down into this again to see what goes on. In the Dow, you have a 77.72 reading tonight. However, again, we don't know where Thursday's going to close, and this is Thursday's early evening trade. So let's go to Wednesday. Both numbers were still over 80. Both were still over 80 the day before and the day before. You have a fully embedded reading. If it loses that reading tomorrow, it's already at the downside target. Doesn't have to go down here. It's already sitting on it. So as a market technician, I don't like if I were long the position with that the market's losing it, but I've got through tomorrow to make a decision. We know the Russell's the weak link, so no surprise here. Been in a trend that's what? Higher high, lower low, and that is still the pattern. If you take out today's low, which was 2188.60, well then I could say you got lower highs, lower lows, a downtrend again with momentum turning, and that would be the market I'd look for the break potentially back here. Hasn't occurred yet. Then I get to the VIX, and now I'm really scratching my head. The VIX is one of these markets that you know that if you get a bear move coming in the market, it explodes to the upside, and if you get a bull move, it drops. We saw a pretty big break today in the markets from their highs, yet this market was down 7 ticks. I'm not impressed. Don't quite know what to make out of that. The trend is down. You have the lower highs, but you also have, if you come back here, right here, you have 1719 is one low. This low is 1633. So you have higher lows and lower highs is what's really going on. And you're stuck right at the two key averages. This is why I'm scratching my head. Don't know what to make out of that. In the 30-year bonds, you got all the way up during the bullishness today of where? Again, that upper Bollinger Band area, and where did the market peter out? Right there in an overbought condition, right what it should have done, and it backed off. It's still overbought. It's still in an uptrend. If you take out, because it's an outside day up today, 165 and 132nd, then I'm going to look for the market back to the 18-day average of closes. That's normally the play. I'd be wrong if you take that out and you take out today's high, which is, again, one of the highest highs we have. In the 10-year note, could it be any easier? Went up to the upper Bollinger Band and are not embedded. Back here was the time to come out, and the market, I don't care what it does after that. Right thing to do. Dollar index, when you hit the Bollinger Band right here, not embedded, you're supposed to, at least I teach. I think the traders take the money off the table, the smart ones. That doesn't mean I'm smart, it's what I teach. Maybe I'm a fool. I don't think so. When you look at the eurocurrency, you get up to the upper Bollinger Band, you're not embedded. So long. You don't want to hang around for that type of stuff, in my opinion. British pound, still very much in an uptrend, very overbought. The resistance point we identified is on the way up, being the 100-day average in the upper Bollinger Band. It's not embedded. I think the pros got out of this market. And when they get out, they don't have to have a position. It's not compulsive gambling. This is, you take your slice if you can get it, and you try to run. Bitcoin is still bullish. This market has got that gorilla glue trade. You got up to the Bollinger Band, Bollinger Band, Bollinger Band, Bollinger Band. First night so far that we're not hitting it. I don't know that it won't. It's overbought. I teach you never buy a Bollinger Band, ever. And that would fit right in. Does it give me any reason to be short? None at all. Then we get to the differential between crude oil, the Brent and the WTI, still favoring the Brent. You had a bad number today in the EIA, and the market is scared. China is now putting in restraints of train travel between different cities. So they're shutting that down. There's talk they may shut down travel within the cities. You know, you've seen that they can cordon off blocks or miles of a city. And remember, their cities are not like in America. I mean, 15 million people in a city, you got plenty of that. And when they shut these down, it's because of the COVID-19. Well, if people can't get to work, what does it do to the demand for the copper markets and other products? You've got to remember what that's all about, and you got to keep it in your mind. And that's why oil, in part, is falling back at this point, because you're losing a good chunk of their demand temporarily. I don't know that it'll stick or not. I also don't believe Iran's going to get back into the open world markets. They've done their nonsense again. They don't know how to perform in a way that's going to ingratiate them back into people dealing with them. And I'm talking the government, not the people. And that is the problem. So you're not getting that. Gasoline acting okay, not a great thing. You lost your embedded reading. Market's probably going to drift a little towards that 18-day average. So you put it all together, and I think that what you're seeing tonight is, whoa, what did I just go through today? And people taking a deep breath, figuring how do they get through the next 2 days as they try to see what happens. Remember, we get initial job claims in the morning. If you like to learn an idea on how to follow what I do, you can do this yourself. It's not hard. It starts off with the swing line, which you hear me talk about all the time. I teach you how to draw it by hand, make you do it on the charts actually, and then I teach you how to filter it with moving averages, both for support and some resistance points. The second step is we're going to take you into momentum with the slow stochastic. I'll give you everything I know from the basics. The enhanced Bollinger course teaches the next level. The Bollinger Bands, I think you want to learn that. That's going to be important because it ties together with the stochastic. But you don't always hit a Bollinger Band. That's when the deviations from a moving average called window envelopes come into play. 54 videos, 8 hours of learning, $249.95 for the course. You get also access to my full research if you're not getting it. In addition, you get our charting software, another $100 a month value. How do you throw it all together? It's simple. You go to the website, go up to the words education. My courses are listed there. You can buy them right online. If you have questions, call my staff. And when you're taking the course, if you don't understand something, you can write me. I do write back. And I often call my students. How you doing? What's going on? Do you need any help? Anything that they want to reach out to me, I'm right back with them. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.